here at PDAC, and the Yukon's been rated by the Fraser Institute as one of the most prospective jurisdictions geologically, globally. Let's talk to Rockhaven Resources President and CEO, Matt Turner. Hi, Matt.
Hey, James.
How you doing?
Nice to see you.
Good to see you.
Good, really good.
Good. So
come on in.
High-grade gold.
Yeah.
In the Yukon, you've got some fresh news. Tell us about that.
Yeah. So we well, first a little backstory on the project. So we've been working on Klaza now since 2010.
Okay.
So we basically drilled the discovery hole right near the end of 2010. Raised a bunch of money that year and proceeded to drill about give or take about 30 or 1,000 meters past that point.
Okay.
We took a step back in 2013 and basically looked at where we can really go with this project, and we noticed that some of the widely spaced holes out on the west side of the project brought back some really nice high-grade numbers.
Okay.
And those hole spacings were like 200 meters apart, so basically two football fields apart, right?
Wow.
And so in 2013, we went and did some detailed trenching on surface, confirmed that in fact, spectacular grades, really good continuity, and a decent strike length, about 500 meters in those two high-grade zones.
Okay.
2014, we went in, drilled about 20,000 meters, and put out our maiden resource after that program. And then we did a similar type program in 2015, about 15 or so thousand meters. And at the end of the day, we were sitting at about 1.3 million ounces of gold, with about 500,000 ounces of gold equivalent in silver, lead, and zinc. So,
okay. Now your project's kind of unique in that you can drive to it, unlike most Yukon projects, right?
For the Yukon, it's definitely unique, and it's furthermore, it's close to a town. Actually, a town that was close to a historical mine. That's right near our project too, and the power grid as well.
Okay. So, tell us, Matt, about the PEA that you came out with this
past so we just, on Tuesday, we announced the first PEA, so basically wrapping everyone's head around the economics, or the potential economics on where we're at right now. And the numbers are pretty decent to good, I'd say. We're at $150 million NPV with a 20% IRR. Pre-tax, post-tax, we're about 14% IRR and 86 million NPV, but still, and that's at $1,200 gold and a 75-cent exchange rate. Now we're almost $100 over that right now.
Now Klaza has gold, silver,
lead, and zinc.
Lead and
zinc.
Yeah. And
so
what's the gold what's the breakdown as far as the metals?
So in the PEA, we're producing over a 14-year mine life. We're producing just over 600,000 ounces of gold, about 11 million ounces of silver, and about 100 million pounds of lead and zinc combined.
Okay.
So
now the 14-year mine life is longer than what you see in a lot of PEAs, and a 7-year payback, I think, fair to say, raised some eyebrows?
I guess so.
Tell us about why the 14-year mine life?
Well, the biggest thing is that this is going to be an underground mine, and so there's an open pit component, but you've also got the underground component, which takes 4 to 5 declines.
Right.
So there's a fifth that's quite small, but effectively 4.5 declines. So that's a lot of underground development, and so that's obviously within that project capital, right?
Is there a possibility with more drilling to go with fewer declines?
Well, that's the thing. When you go back to the history of the exploration project, we were so excited in the first, say, 4 years about these really long strike lengths.
Right.
And then when you start wrapping your head around the economics, you see that you can only develop so much of these long strike lengths with each decline. Okay. So that's one of the things, is probably at the end of the day, you're still going to have 4 or 5 declines. So just because you can only drift out so far, right, off those. And so
Matt, can you take us through why you went with the 14-year mine life when often like a PEA is 10-year mine life, which would improve the economics?
For sure, yeah.
What was your thinking on that?
I guess the biggest thing is that, again, it's underground, so you can only produce so much at one time, and you can only have so many working spaces, and so we basically. The optimization indicated that a 1,500 ton per day mill was going to make the most sense, and so that's what it worked out to be. And one of the big things too is with the discounting rate, is that you're losing a lot of your value in those later years, obviously.
Okay.
So you still got decent production in those later years,
Right.
but you're not getting the full value. So that's
Yeah.
obviously hurting the economics.
But so on the positive side, though, I mean,
on the positive side, there's tons of
better
positive.
jobs, right?
Better jobs,
Longer.
better. I think it's more attractive to the larger companies
Okay.
because they like to see substantial mine
You're
lives,
serious.
especially when they get into a community and into a project, right?
Okay.
And there's hopefully, because there's so much blue sky to add, so many potential ounces to add, you could see a lot longer mine life in just 14 years. So
Okay.
at the end of the day, I don't think the CapEx is going to be a big deal when when we fast forward into the future. But
Right.
again, there's a lot of work to be done
Yeah,
between now and then,
Yeah.
and it's going to be exciting as we continue to advance the project.
Okay. What are the plans for the next few months? What's next?
Good
for
question.
Rockhaven?
One big thing obviously will be to raise money, and then I think with that, almost hand in hand, develop a 2016 exploration program that maximizes the value of those dollars. So whether it's stepping out and turning more of these other potential ounces into resources and then feed those back into the economic model, or depending who's writing the check, maybe we'll focus in on the inferred resources and up the confidence. But I'd like to see kind of both being done at the same time. I think that would
Right.
make the most sense.
Okay.
So,
Now, Strategic Metals is a major shareholder.
yeah, they own about 46 or 47% now.
Right.
Yeah.
Are they likely to step up again, or might we see a different kind of financing?
Yeah, it's going to be interesting to see what we do on that front. I don't know. I don't know what's going to happen. I can't really speak for Strategic. They're still, very happy with how we're progressing things.
Right.
But I think it would be important right now for Rockhaven is to get another strategic investor involved.
Okay.
So.
And would a PFS be the next step as far as?
Again, that depends on what we want to do this year. If we're gonna increase the confidence in those resources, bring it up to indicated, then chances are a PFS would make sense. But if if the end of the day we decide to go to just add more ounces, then who knows? It might roll that into a future PFS or into a new PEA. We'll see.
Okay.
But
Sounds good.
Yeah.
Thanks for taking the time.
Thanks,
Matt.
James.
Good to
Pleasure.
talk to you again.
Yeah. Thank you.
Yeah, cheers.
Thanks.